Hello, chumps. I'm the Chump Change Trader, and welcome to the Small Account Trading Challenge, where I challenge myself to flip a $2,000 account and see how long it takes trading options. Today's March 27th, 2023. Hope you guys had a great weekend. A couple of news that had happened over the weekend and today. Janet Yellen actually walked back her remarks about not saving the banks. And so we have here a couple of news articles that actually had happened over the weekend, and let me pull that up for you. So we have here, they're trying. Yellen and Powell are trying to sort of calm the markets and calm the country, and saying that the banking system is sound and resilient. And as sort of the articles and the news has mentioned before, the key thing from this sort of like tour of like telling people, hey, don't worry, don't panic, is that Yellen actually walked back her statement on Thursday, saying that she was prepared to repeat actions taken in Silicon Valley Bank and Signature Bank failures to safeguard uninsured bank deposits and failures from more deposit runs. So definitely, walking back the statements that kind of spooked the market on Wednesday. And so we're definitely sort of seeing this idea of them doing damage control. That's sort of on a macro level, but definitely other good news is that, SVB or Silicon Valley Bank also had basically a confirmed buyer. It's going to be First Citizens Bank. They're going to buy the deposits and loans that SVB has. So that would be definitely plenty good news for the banking markets. And as we can see here, the Dow Jones was up today. So was the SPY. And then, of course, the one place that the news, for some strange reason, doesn't affect positively was the NASDAQ. So things like, First Republic Bank, I'm pretty sure SVB was probably not met with positivity, or if this is going to respond. Great time to lose. Oh, actually, it's unlisted. That's probably one of the reasons why. Oh, if you just look at like Bank of America, other big banks, they probably had a good solid up run too. And then of course we can always look at XLF, which is a financial sector ETF. So they definitely had a good run. This is a month view. Sorry, let's look at a today view, or at least a 3-day view, so that way you can kind of see that uptrend that everything has been making. So without further ado, what did sort of I do in regards to the market news? Well, it didn't really change too much of my strategy, but it did make me worry less. And so I was still in SockSax, and you already know that I had the initial iron condor, and now as time is moving by, as you can see, so before that profit curve was not moving up, but as time is moving by, it's starting to actualize. And as long as this profit line, or as the stock price maintains its position somewhere in between these two goalposts, I should be okay. And then as you will know that I also did a put vertical that I put in there as a safety net, because in case the stock was, in case the tech sector was going to make a huge run out, I would be able to mitigate any kind of losses on the uptrend. So this sort of gave me that buffer that when you stack all of these positions together, it would have kind of widened out or lowered my actual losses if the stock price were to push back past 453. So that position is still in there. So that is pretty much in terms of it. Actually, I think I might have opened a new position. Let me just double check. No, that should be it for that. So in terms of what I'm going to do to kind of protect or sort of think about the next position, and of course, actually, I do have my degenerate move with Credit Suisse, and of course, the news happening here in the United States of confidence in the financial markets here in the stateside was not reaching through our European counterparts. So of course I'm pretty much going to assume that I'm going to take a big L on this one, but luckily again, it was $58 and it was worth a Hail Mary just in case Europe was able to combat sort of all the issues that they were having themselves. And from the looks of it, they were trying to do something, but it's quite difficult when your stock price is literally in the pennies. So yeah, not too worried or focused on that sort of front. So yeah, that's pretty much it in terms of the position. In terms of what I think sort of next moves are, is that if the stocks the stock market is going to take more of a bleed in terms of the next couple of days or this entire week, then I'm going to want to think about creating some sort of repositioning or stop loss in terms of how I mitigate where I'm going to be out of my profit zone. So for the Iron Condor, I purposely put myself somewhere in the 400s and below for like that area over there. In terms of this call vertical right here, there may be a position where I can just simply convert this into more of like an Iron Condor itself. So doubling up on the Iron Condor, creating other legs on the other side. So then that way I have two positions out that will give me some coverage there. So there's some options there in terms of any kind of sort of risk of coming out of my window. But for the most part, in terms of where I had tracked where SOXX is going, so for the let's look at the last month data. The area supports that hasn't really changed. We actually have a new sort of float area right here. I'm actually gonna put that drawing in. So we got a nice sort of support area that's sort of being hit from today, and that's at 424. So we're starting to see some patterns, and as the market continues to just sort of chop sideways, that's great. It just means it wastes time, and then I can keep my premium, and we'll just rinse and repeat and move on with our lives. So nothing really out of the ordinary, but I will say that there's a big gap. So the moment that it breaks this level right here, we don't see another support level for a while. This is just an island over here. So if it goes below that, then that's kind of your breakout area. But I have a funny feeling it's going to bounce around in this area for quite some time and maybe decide to shoot up. But what I will say is that the types of rallies that we're seeing new lower lows. And what that means is that if you draw a trend line from the highest point right here to right here, each time that there was each time we've created a new lower low in the past few weeks, whereas when we were rallying earlier on, they were creating newer highs, newer highs in each level all the way up until that point. And so that's kind of where you look for, newer high, this is the same level, newer high, and then consolidation, newer high, but seems like it may be running out of steam. So if we keep tracking this pathway where it's just going to chop sideways, because when you look at the lows, right, we have newer low, higher low, same level low, new higher low, but that's it. It ran out of steam at that point. Same level low, and then same level low. So when you look at all these trend lines, you want to look at both the highs that are being made and the lows that are being made, and then that's pretty much what's going to allow you to dictate what your current market trends are when it comes to sort of how you evaluate each of those trend lines. I can probably move this one right here. So yeah, so that's pretty much it. If you have any questions, feel free to leave a comment or down in in the comment section below, and I'll see you guys in the next one.